Thank you for joining us for the CNBC Africa debate on Africa's economic outlook, coming to you from the Cape Town Convention Centre, where the 25th World Economic Forum on Africa is currently in session. Joining me to take the discussion further to my immediate right, I am joined by Minister Nhlanhla Nene, who is Minister of Finance, South Africa, Kaberuka, who is the Minister of Finance and Economic Planning for the Republic of Rwanda, President of the African Development Bank, Dr. Donald Kaberuka, Antony Jenkins, who is Group Chief Executive, Barclays, United Kingdom, and by Makhtar Diop, who is Vice President, Africa, World Bank, based in Washington. Gentlemen, thanks very much for joining me. Before we jump into our conversation, I'm going to do something a little unconventional. And I want us to think about the 3 days that we've had of rigorous debate with government, stakeholders, business, academia, civil society. I want us to take a step back, and I want you to indulge me for just one moment. And that means asking you to close your eyes. So I'm going to ask the audience in the room to close your eyes, and I'm also going to ask the audience that has joined us across the African continent to follow suit. And gentlemen, if you could do so on the stage. I want us to visualize a couple of facts around the African continent. If you go back to the Economist's picture of the African map in 2010, and you place India in that context, you place China in that context, you place the United States squarely onto and into the African map, and then most of Europe. That is how significant we are from a size perspective. We have 1.1 billion people on the African continent. And the exciting fact about them is that 75% of them are below the age of 35. So they have a youthful glow, they're energetic. Yes, we need to deliver on our promises, but that's going to be part of our discussion today. We have 60% of the world's uncultivated arable land in Africa. We have an abundance of natural resources. And a fact I recently discovered from Jonathan Berman, who wrote the book Success in Africa, is that we have 150 companies operating on the African continent that have a turnover of more than $1 billion. Thank you for indulging me, and you can come back to reality. So that is the opportunity. That is the economic stage that we have to work with. I'm now going to open to Minister Nhlanhla Nene and ask him whether the discussions that we have around GDP are that relevant. We have the African Development Bank forecasting growth coming in at 4.5% for 2015 for the African continent, at 5% for 2016. And we speak about this 5% growth rate as being absolutely crucial because we can then impact unemployment. Minister Nene, how relevant are GDP discussions?
Thanks, Bronwyn. The picture you've just painted puts a number of things to the fore. The first is that, yes, these are opportunities, but they also present us with challenges that we actually have to deal with. Dealing with the size of a youthful population that you have mentioned means that we actually need to put in enormous amounts of investment in order to be able to cater for their future. But also it says that the amount of resources that you have referred to need to be used efficiently, and we need to deploy resources in a manner that begins to lay the foundation for future generations, and we have that responsibility. And the GDP numbers are indeed important. Growth in our GDP is also of critical importance, but what is of even more critical importance is the quality of that growth. It is whether that growth takes everyone on board. It is whether that growth continues to be sustainable in order to be able to create an environment that is going to be able to cater for the next generation. So that is what we're confronted with, and I think after all the discussions that we have had in the past 3 days, a number of ideas have come out, some of which are actually already at implementation stage, and I think we need to build on that, and the prospects are indeed promising.
Minister Gatete, Minister Nene makes a very pertinent point, and that is the focus on the quality of growth that we need to strive for. What is the key driver when it comes to the quality that we should be aspiring to?
Yeah, thank you very much. Indeed, it's not just the economy growing, but it is really what does that mean? What does it reflect? Is it creating more jobs for the young people? Is it providing the skills gap? Is it filling the skills gap that we do have? Is it really providing the health services that we need? Is addressing the poverty levels? So that when we are growing, we know that we are creating more opportunities for the companies to be able to expand and be able to hire more young people. And at the same time, is it helping the SMEs, which are creating more jobs for our own population? So we have to analyze it and look at it in terms of the impact and also in terms of the economy growing but not leaving anyone behind, as the Honourable Minister just mentioned. So for us, the inclusive development has been very crucial and has been emphasized throughout the whole conference here for the last 3 days. And I think this is very relevant for Africa at this moment in time.
Dr. Kaberuka, the stats vary between 12 million and 18 million young people entering the job market in the African context on a yearly basis. Again, Minister Gatete has made a very valuable point around the fact that we need to cater for the youth dividend that we are sitting with on the continent.
Right.
Is this our biggest challenge?
Thank you, thank you. By the way, you should say that I'm the outgoing president of the bank. Because there's an elected
I was going to
president.
wait for that to the end
Thank
of
you.
the debate, but thank you for setting the context, sir.
But first of all, something about the numbers from our reports. An average is an average, 4.5%. But there are countries actually well past 7%, 8%, about 8 of them. And I think you need to look at pictures in different parts of Africa, beginning with the most dynamic part of the continent, which is Eastern Africa. So it's a mixed picture. Now, picture the World Economic Forum in 2004 and 5, which I attended, a discussion on Africa. It was a completely another discussion. It was about aid. It was about lack of growth on the continent of Africa. It was the Africa we used to discuss. Now, today we're discussing another Africa of opportunities. So my take is we have come a long way, but we still have a long way to go. And now, the jobs inequalities, you have to put in the context of what I said in Addis Ababa. We have had strong economic growth. Now we must turn it to economic transformation. The two are not the same. Because once the economies are transforming, we shall create jobs, we shall create opportunities, the middle classes will be coming up. So the challenge for Africa is how to keep economic growth strong, sustained, sustainable, and then go to the next phase, which is economic transformation. And I think in a number of countries, I see already the beginning of that.
Antony, you've got an interesting perspective. You bring international context and local context, given the fact that Barclays has been operating on the continent for 100 years. What are the key challenges to Barclays' continued growth story when it comes to Africa?
Well, broadly, we're optimistic on the prospects for Africa. I agree with the points that have been made already, but if we think about it, Africa is going to have to seize this growth opportunity in a world that is experiencing structurally lower macroeconomic growth than the growth that we had before the crisis of 2008, and in a world which is ever more interconnected and ever more competitive. I think there's lots of the right raw ingredients on the continent to create that. We know all about, of course, the abundance of commodities and so on, but some of the policy measures that are being made now to structurally transform the economies on the continent are also powerful. From our point of view, we think that we have a vital role to play in supporting business here, and that comes in various forms. Firstly, we have many large multinational companies around the world who are our customers, who are either doing business here or want to do business here, and we can partner with them to help them grow and expand. But equally, there are many small and medium-sized enterprises on the continent here that are growing rapidly, and we can help them not only do business in their own country, but regionally and then ultimately internationally. So there's a great role for banks and financial services who have both the local and the global presence. The final point I'd make is it's quite tempting, and there has been a lot of discussion at this meeting, to look for analogues in other parts of the world and look at how other parts of the world have created growth. I would strongly advise against that. I think that's looking in the rearview mirror. This is very important to look in the forward mirror on the future. What's the future about? What are the assets that the continent has, and how can it bring those assets to bear to create growth for all of its people? And I think particularly about the power of technology to create jobs that we can't even think of now. And in a way, there's an opportunity, if there can be rapid deployment of technology infrastructure and skilling, to create a huge competitive advantage. I would just close with this comment. I employ 1,300 computer programmers in Lithuania. Why couldn't I do that in Nairobi or Dar es Salaam or in Cape Town? If the nations of Africa could provide the skills, then businesses will provide the employment.
Makhtar, Antony makes the salient point that we need to look to future growth drivers. And I'm going to put the context of falling commodity prices into the equation now and say that there are many, many countries in Africa that have exposure to single commodities as a source of revenue. How does that change the Africa growth outlook?
What is wonderful right now is that African countries in the decade have been able to build some buffers and have a resilience. You have a crisis 2008, 2009. In spite of having a huge slowdown in the world economy, countries were able to continue growing. It means that they have used creatively all the instruments that we have in macroeconomic making. Now, moving forward, we have the fall in the commodity price has also a positive impact of countries for oil importer, for instance, which is a significant part of the African continent. So we have, with that, ability to keep inflation low, to have food prices going down because fertilizers are very much linked to the prices of all those commodities. At the same time, to take that opportunity for countries which are have their economy based on commodities to start thinking about diversification. And it's interesting because today, when we have the conversation at this World Economic Forum, this is the same conversation that you have with policymakers in the G8 countries: quality of growth, employment, inclusiveness, global public goods, climate change, and diversification of your economy and adapting your economy to the next phase. So what is a very strong message I'm taking for this meeting is that Africa is becoming a real part of the international dialogue on economy. It's not an exception anymore. And that is translated by the fact that investors are coming to Africa, and they will not have one model of development in Africa. Often I'm asked the question, what will be the African development model? Will it be the Chinese model? Will it be the Singapore model? It will be, I say, it will be the South African model, the Rwandese model, and so forth. And the good news is that countries are growing faster in Africa. A country like Rwanda, who are not countries with large endowment of natural resources, which means that the economies are now diversifying in Africa.
Absolutely. Diversifying, Minister Nene, looking at macroeconomic stability and insulating African economies from external shocks, which I think is what Makhtar is touching on in depth there. Your thoughts of where we are in that process?
Indeed, it's an important point because over-reliance on our mineral resources as a source of income and over a period of time has actually proven not to be a sustainable path to take. But what we have also picked up was that, for instance, with the fall in the oil price, it's not all of the countries that actually benefited from that. Some countries who are oil exporting countries took the knock, and the ones that were oil importing actually got the benefit of that. And, but also what that does is it has an impact on our current account balance, where you would find that depending on what monetary policy you exercise in terms of your exchange rate policy, you would actually be able to take advantage of your floating exchange rate, like in our case, to be able to mitigate that. But I would want to believe that you do need very strong macroeconomic policy in order to be able to respond to such exogenous shocks. with this one being, I mean, the one on monetary policy being one of those. But at the same time, diversification, as my colleagues have said, becomes an issue, because if there is a fall in the commodity price that has actually been a source of revenue for your economy, it means you need to find and explore other sectors that would better place you in order to be able to make up for lost revenue. And it is for that reason that I think we're beginning to look at, like in South Africa, other sectors like agriculture that otherwise were on the decline. And it is important that, as the president of the African Development Bank said, that we need to transform our economies such that they are structured in a manner that they would be able to respond to these challenges much more flexibly and favorably.
It's been widely discussed here at the forum that investment in infrastructure is crucial to boosting GDP growth on the African continent. And I don't mean to pick out any territory or region. I know there are many centers of excellence across the African continent. There are many economic corridors, but I was very enlightened this morning when we had some input around the Central Corridor, which is being created with Rwanda, Uganda, Tanzania, Burundi, and Kenya. Launched in June 2014, it's taken 9 months to get through the acceleration phase to identify 121 sub-projects to the mega program and 23 cornerstone projects. Of those 23 cornerstone projects, 4 have already been taken to bankability phase, and another 4 are in the early phases of that bankability phase, with just a few studies to go to get there. The question now is what impact, Minister Gatete, you're going to see that infrastructure development when it comes to fruition, because now I am jumping the gun. It is now into implementation phase. It's been handed over to NEPAD. What will that do for growth within the East African context? And again, I'm using it as an example of a broader African picture.
Yeah, thank you very much. I think you've touched to one of the key drivers to the economic growth. And in terms of sustaining the economy, one of the key factors is really infrastructure. Another one, I would say, it is skills that we need for the future, and also increasing the financial base, which is very critical for the private sector, and also doing it in a manner that you are looking at the regional approach rather than looking inward at the country level. For the corridors, in the East Africa, we have many corridors. One is the northern corridor that goes from Burundi, Rwanda, Uganda, and Kenya. And the central corridor that, as you mentioned, where we have 5 countries. We have Uganda, we have Tanzania, Rwanda, Burundi, and DRC. The northern corridor has already been implemented now for almost 3 years, and it has really results where the focus was on infrastructure, focusing on the railway, focusing on the pipeline, focusing on energy, and actually the IT, I would say, which has been very, very useful, and complementing it with the single customs territory. And what we realized is that actually some of the decisions do not require money. They just need decisions of the heads of state. And I could just give you an example, is that it used to take 22 days to bring the goods from Mombasa to Rwanda, and 18 days from Mombasa to Kampala. But when the heads of states took decisions, and they took decisions that we should remove all the roadblocks, we should remove all the way bridges, we should address the issue of insurance, where you needed 3 insurance for each of the territory, using the cargo tracking system rather than stopping the vehicles, and also having one clearing house at Mombasa. It reduced the number of days from 22 now to 5 days in Rwanda, and from 18 to 4 days in Uganda. And of course, that one had an impact on the cost, where the cost of a container, 20-foot container, was reduced by half. And that is a big impact, because there is more rounds to make sure that you can always go back and forth. It had an impact. And now we are investing together in all the other infrastructure projects, and these ones are being monitored at the level of the heads of state. Now, 2 months ago, the head of state of Tanzania also invited the other heads of state, when the projects for the Central Corridor were ready, to discuss how we can replicate that and implement the projects of the Central Corridor in a similar manner. And the heads of state have taken a decision that they'll be meeting quarterly to make sure that they can work together as governments, but also working together with the private sector, with international financial institutions, and all the others.
Minister Gatete, I want to bring Dr. Kaberuka in at this stage. And again, so looking at a bird's eye view of the African continent, over the years you've spoken about how the conversation around Africa has changed. Give us your thoughts on the traction that we're seeing of executable infrastructure projects from a broader context.
Yeah, but what the minister is saying here is extremely important, both ministers. Because at the end of the day, infrastructure is a means to an end. It's not an end in itself. So if you have a corridor, and you have many of them, and you have all these non-tariff restrictions, that piece of infrastructure is suboptimally being used. So what he says is extremely important. Build the corridors, a physical thing. But for heaven's sake, remove the man-made barriers. It's as important. Equally, what Minister Nene says about macroeconomic stability, we fought very hard, African countries, beginning with Ghana, over 2 decades, to build macro stability on the continent. It should be maintained. Buffers should be rebuilt. But again, macro stability is only a means to an end. The means to ensure that we have got a whole range of predictable policies which make investors make the right decisions. So we're at a point, the aeroplane is on the tarmac, on the takeoff. It's about to take off. We have the pilots in the cockpit. There is fuel. I said at the opening of the annual meeting of the bank in Abidjan, each time we talk about development in Africa, it's about money. We need loads of it. But money does not bring about development. Yeah. What brings development are policies. Policies that are predictable, policies that make sense to investors. And then you have capacity to implement the policies. So what I'm saying now is that the policies in Africa are getting in the right place, almost. A few countries make mistakes. Some are suffering implementation capabilities, and those who have to help. But on balance, I think we shall still have a big gap on infrastructure. We have to close it by attracting private capital, and that means the right policies, the right implementation capabilities. And that is what we are trying to do in the African Bank at this time. Now, situation varies from country to country. You know, from São Tomé, Guinea-Bissau, and South Africa is different. So we have got tailor-made policies for these countries. But I want to leave a message here. Money is important. We need tons of it. But at the end of it is the policies which determine the return on investment on that money.
Are you confident about the fact that the rewards of investing in Africa, Antony, outweigh the risks to the point that Dr. Kaberuka is making?
Yes, I think they broadly do justify the risk. Obviously, there's multiple different ways of funding infrastructure. You can do it at the sovereign level, you can do it at the private level, you can do it in some combination. And clearly what investors are interested in is a long-term stable return for the capital they put at work. And as long as the conditions can be created to do that, there's clearly the economic demand there. And I do think that there's some very encouraging progress that we see. I mean, here in this country, in South Africa, you know, the efforts to improve the power situation, the use of renewables and so on is very encouraging. So broadly speaking, I think the banking system will support these types of opportunities in conjunction with other actors in the space. I do think, though, that the question of infrastructure needs to be thought of very broadly, because it isn't just about the traditional things we think of, you know, roads and power and that type of thing. This notion that we have to digitally enable Africa, in many ways, is the most powerful thing that we can do. And while I don't subscribe, as I said earlier, to the approach of just looking for analogues in other parts of the world, I do think there are selective initiatives that can work here. I was in India recently, and there is a plan there to put 4G across the whole of India. So in the most rural part of the country, you'll be able to access content at high speed. There's a lot to be learned from that sort of approach, and that could be financed, because that would be a real economic engine of growth in Africa.
Can I actually, if there's an area where Africa is making very good progress, this is the one. And,
in technology.
Yes, and the reason is that in the 90s, when there was deregulation of the telecom sector, private capital massively in, optic fibers on land, in the sea, telecom companies, which has enabled many economies to leapfrog. So I do think actually there, I think Africa has made a lot of progress. Now we need to take it to the next level.
It's an inflection point that needs to be created, absolutely. I think, around this.
And perhaps we can put a couple of stats around that, because we know that we've got 80% mobile phone penetration across the African continent. We've only got 11% of financial inclusion or banking availability across the continent. So you talk about adding those two equations together, be it, as Dr. Kaberuka stresses, health, education. The term that we've been using at the World Economic Forum is leapfrogging, and I'm sure you've heard that in many of the sessions that you've attended over the last 3 days. Makhtar, let's get you to weigh in here.
Yes, I just want to rebound on what Dr. Kaberuka said, which is so right about policies and financing. And we talked a lot about financing. But in addition, good policy attracts money. It's not only that it's good, that it helps to increase the return of your investment, but it attracts. And I can give you some examples. When we start changing the policies in some of the energy sector, we start having a lot of independent power producers coming in Nigeria. Exactly. We had in other places of Africa. So what we would like to do now in attracting money is to start to making that money cheaper for Africa. We now have a lot of money coming to Africa, but it's still very expensive. If you look at the fundamentals of our economy, it's not justified to have this level of premium that the market is giving to Africa. And why it's happening? It's because there is a risk perception which is very high. Something happened in East Africa, and people consider that it's affecting West Africa. And I try to explain to people sometimes that Dakar is closer to Paris than it is to Nairobi. So what I see is the negative contagion effect is something that we need to break.
To that point, before we move off the aeroplanes and logistics, a number of businessmen have had to leave the forum, travel all the way from Cape Town to Dubai, and then from Dubai to Lagos. That's what's happening this evening. So your point is well made.
Yeah, and right now we need to lower the cost of financing. What's happening in infrastructure? When Dr. Kaberuka and myself go and mobilize resources, we finance African infrastructure with short-term resources, short maturity, 8-year maturity, to finance an investment which will amortize over 30 years. You have the pension fund, you have the institutional investors all around the world who are sitting on large liquidity, and we want to have higher return because the population is aging in Europe, it's aging in other countries. And they are hesitating in putting these long maturity resources to finance infrastructure. The next step for us is to start tapping on that liquidity to be able to not only bring resources in Africa, but to bring them at a lower cost and to be able to smooth the debt profile of countries and have the macroeconomic policies that I put in place not be affected by this effort to accelerate our growth. So this is something that I wanted to add on the infrastructure story, because we talk about policies and financing as two different things. It goes together. And the example of mobile was a very good example, where today we have the infrastructure. The next question is the content. We want to have more content on internet, which is coming from Africa. If you look at the content, most of it is coming still from Europe, on the part of the world, while there is a huge amount of content that
Antony wants to come in here
from Africa.
Again, I think it's wonderful that there's 80% mobile phone penetration. But what can those mobile phones actually do? They're pretty simple handsets today. They don't facilitate delivery of content. They don't facilitate creation of micro businesses. They don't create delivery of educational and healthcare solutions. They don't, in general, support fostering agricultural improvement. But we know that it's possible to do all of those things because there's little tiny projects doing those things across the continent and in other parts of the world. We were talking earlier in the week about one country that was saying, you know, by 2020, all of our high schools will have access to high-speed internet. And, you know, that's 2020, that's 5 years away. And I just feel that this is an area, and I know everybody will probably violently agree, that, you know, if there's one point of leverage in this whole discussion, getting this moving faster. And then the content that you described, it has wonderful knock-on effects, not just economically, but socially as well, in terms of delivering all of these solutions.
But I don't agree with my colleague here. I think mobile telephone has made a huge difference. From farming to health to educational delivery, where the policies are right. I can give many examples, but I can do that another day. But I think that it's not simply a question of ownership. People tell me that we have now more mobile phones than some countries in Europe. It has made a difference. So I would like to take this up with you after this session.
I don't think we disagree. I think
gentlemen, thank you.
Absolutely.
We'll give you a moment. Let's just give you a moment. Are you both all right?
Yeah, we're good.
Okay.
No. I want to come in now with the elephant in the room, and that is the FIFA scandal, which brings a bigger issue to the fore, and that is the one of corruption. So let me throw some stats out there. Transparency International has identified the 10 most corrupt economies globally. 5 of those are in Africa. Of course, that may be skewed by our sheer size and 54 countries, before you come back hard on that fact. The Mo Ibrahim Foundation says we lose $148 billion annually as a result of corruption. Now that is 50% of annual tax revenue, 25% of annual GDP. I actually thought I'd misread those stats because they were so staggering, so I double-checked them. How are we going to stamp out corruption? Because it goes to everything that we are talking about today. Absolutely. We need money to grow Africa. Investors will give us money, both domestic investors and international investors, as long as they know they can make a return. They will even give it to us for the long term if they know that they will safely be able to extract that money at the end of the day.
Yeah. No, indeed, Bronwyn, through corruption, that's one of the leakages. That's where we lose money. A number of other schemes and scams, illicit financial flows, and all sorts of other things. I think it's one area that if we do not close, because those resources are lost, and they are lost to the nations that would have benefited through all these noble projects that we are talking about today. And the FIFA one is just but one of those. At the end of the day, I think our policies, again, as Dr. Kaberuka said, are the ones that should actually stand firm in order so that when there are such incidences that have been identified, they can be dealt with by the authorities, law enforcement authorities, and the legislation that is in place to be enforced without fear or favor. And I therefore would want to, on this specific one, as soon as we have available information, our law enforcement agencies are going to have to do what is right and deal with the matter once and for all. Because at the end of the day, we, as you would know, that we have a very transparent budgeting process in this country. From the government side, I am confident that things were done properly, and we were very rigorous on this. But when corruption takes hold, I always say corruption is a very well-organized project that succeeds without any qualms, because all parties cooperate. In this instance, we talk about how you bring together the various stakeholders in order to implement projects. The corruption one, you don't have to bring them together. They are brought together by the common greed and eagerness to loot. Therefore, they would succeed easily, and that is why also when it unravels, it just takes exactly the same route. And with our existing laws and systems, I would want to believe that we would be able to get to the bottom of it once we have got the information. But I must just say, on corruption, if we also don't deal with it, all our noble plans that are on the table will actually not be fulfilled to their optimum. Let me also indicate that, the other problem that or the challenge, if I were to say so, the other challenge that we should also deal with is when we implement our infrastructure projects. We need to have, for sustainability, we need to have a longer pipeline because you need certainty that beyond this, you don't want to complete one project today and only start planning for the next. So you need a well-established pipeline where you know where the resources are going to go, and they need to be catalytic in nature. And it is therefore, that's the place where there's the confluence, where business and where public sector and the private sector come together. Because it is when you have reduced the risk that the private sector comes in. The central corridor you spoke about, one of our development finance institutions, the Development Bank of Southern Africa, is playing in that space. It's the DBSA, it is the African Development Bank. You see, you find that all the like-minded MDBs, DFIs, government, the private sector, everyone has actually come together, because it is for that reason that we have been able to get to the bankable stage. Project preparation, at the point at which most of our projects fail, has actually been done in a meticulous way and has put us to where we are with those projects. And we are looking at replicating what has transpired there in a number of others, including the Lesotho Highland Water Project, talking about the, the borders. We've got the Pipe Bridge on our site as...
Minister, I want to chat about regionalization as well now, okay. And I want to, Makhtar, throw this to you in terms of regionalization and the opportunity that that presents for investors. So instead of, and again, I'm going to throw forward, and my apologies to focus on the East African context, but again, I do think that East Africa is driving forward faster than other territories in Africa on regionalization issues, infrastructure, etc. Now, if you look at Kenya as an individual population, you look at Tanzania as an individual population, you're looking at what averages of 55 million, 40 million people. Rwanda, you throw in at 12 million people. You have got pockets that you can explore. But think of yourself as a consumer entrepreneur. And suddenly you take all of those countries in the East African region and you're sitting with, let's say, 157 million people. That opportunity becomes compelling for international investors. Your thoughts on whether we are seeing regionalization, and it's to the point that we discussed this World Economic Forum after World Economic Forum, and I'm hoping that we're seeing tangible progress.
Actually, Africa is one of the regions which is most integrated. We don't say that enough. What you have in Africa in terms of West African Monetary Union, ECOWAS, EAC, SADC, those type of ensemble which are functioning so well is not much in a lot of places in the world. So actually, Africa is leading the pack in terms of regional integration. And we should say it and repeat it, because I think that we might be under the impression that Africa, compared to other parts of the world, is lagging. It's not the case. First point. Second point, can we do more? Yes. And I think what Minister Gatete shows, the political will that you have between head of states, which are getting together and addressing very concrete and practical issues, are excellent. But also there are some very important institutional decisions have been made. ECOWAS has now a common external tariff. They are discussing common currency. The West African Monetary Union had an external common tariff back in 2000. Had, since independence, a common currency. So there are some ensembles, and people are now moving towards having common sectoral policies, having way of helping the lagging regions. So things are happening. Now, what is the next things we need to happen is to develop the local currency capital market. I think it would be an important element. And you have a very interesting experience. Rwanda is doing something. South Africa is doing something. Because what is happening now to foster this exchange is to be able to have companies which are working across countries, having a capital market which is large, a stock exchange which is large, which is covering many countries, which allow a saving from Senegal to move to Cote d'Ivoire, saving from Kenya to move to Uganda, etc., and start creating ensembles which are economically viable. All our work, there is not one day that Dr. Kaberuka and I meet and we don't talk about regional integration. That's what is our number one preoccupation, how we can take it to the next step. But let's not forget Africa is doing already a lot.
And I'm using the East African example as a favorable one from a regionalization perspective. Antony, I want you to weigh in on the depth and breadth of capital markets and the importance that they play in driving the African economic growth story.
Actually, just on the regionalization point, many of our big customers in the East African region in particular are pan-regional players and see great growth opportunities. So it's back to your point about the policy creates the conditions for success. I think in terms of capital markets, this issue is not unique to Africa. In fact, many people would say that Europe has got exactly the same issue. People have been talking about broad and deep capital markets in Europe for 30 years, and they look with envy towards the United States. So I think it's harder than it looks, frankly, to create broad and deep capital markets beyond the typical intermediation that banks do. And people have struggled with this, as I've mentioned, in other parts of the world. That's not to say that we shouldn't try, because I think the putative efforts are encouraging, and we should seek to foster local resources being deployed against local investment opportunities. But that does require the right regulatory environment, it requires the right legal environment, and it requires the right banking and markets environments to put all of those things in place. But I think it's as I say, it's not as easy as it looks.
Donald, Dr. Kaberuka, looking, no, definitely not. You're so outgoing, President, sir, of the African Development Bank. You mentioned that we should remove the man-made barriers on the continent, and you've picked up on an area that I'm incredibly passionate about. 2010, we had 5 countries on the African continent that had free access from a visa perspective. Jumping forward to 2013, jumping forward to 2015, we've got 13 countries that have free visa access or on-arrival visa situations. This has got to be our biggest opportunity. Intra-Africa trade is sitting at still around about 12%. Is that the figure we widely or broadly quoting at the moment? Surely we can do more. And perhaps we can just start on the free movement of goods and services before we deal with other issues.
Yeah, first of all, I do want to salute the work of the WEF Global Council on Africa. They took on this matter with very robust analysis, how difficult it is to go from country to country X. And amazingly, I begin to see movement actually with governments taking a close look. So we shall be publishing in the bank beginning this year an index of moving across Africa from the most difficult to the easiest, like we do in the World Bank for doing business. So salute Global Council on Africa. Let me try to go beyond regions because of my functions, talk about the continent. There's something called Yamoussoukro Agreement, which is about the regulation of the aviation sector. So governments agreed, so no issue there. Implementation has been an issue. But if this agreement had been implemented, the cost of flying within Africa would be down by 40%. So we have airports infrastructure, we have a few planes, we need more, but traveling within Africa still costs more than it should. Why don't we begin from here? Because it's easier. Now, let me take the issue of free movement of people. Now, we had a town meeting, the Director of Immigration from Rwanda and a few of his colleagues exchanging experiences. What is security, drug dealers, money launderers? Those can be dealt with actually easier by cooperation than by closing the borders. What we have found is that in the 5 regions of Africa, this is what is happening. In North Africa, it's very difficult, still a challenge. West Africa, huge progress there. By the way, on your number of 12%, it's a cliche here often. But if you go region by region, East Africa, they're close now to 28%.
So that's a blended rate that we broadly quote.
Cote d'Ivoire, by the way, Cote d'Ivoire, trade with the neighbors is now past 50%, which is almost close to European averages. Yes. So be careful with the 12%. It's an average across the 5 regions of Africa. In the Central African region, 5 countries, small population, 42 million people, almost population of Kenya. Free movement, very difficult. So what we're trying to do is to address the fears of the countries. What is it that would constrain this free movement so we can address them? That said, ask the Europeans. Economic integration is not easy. Not all Europeans joined the Schengen Agreement. I think some even want to drop out. So it's not an African problem, but it is an issue for us, which we have to address to make sure that we can expand the size of the market and its diversity. So I'm really hoping that going forward, beginning with the agreement in Sharm el-Sheikh between SADC, COMESA, EAC, we sign agreements, beginning with the low-hanging fruit, which is non-tariff restrictions and free movement of people.
Minister Gatete, still on this topic, indicate or give us some traction around what has happened with the free movement of goods, services, and people within the East African context.
Yeah, thank you very much. I think East Africa is really making progress, especially given the leadership which I mentioned earlier. I was mentioning earlier the Northern Corridor, when the head of state says, first of all, let's remove the work permits. Let anybody in Kenya, Uganda, and Rwanda be free to work anywhere. And that was done. Because they discussed it, they took a decision. Number 2, they said, why do we need passports? And all the heads of state made a demonstration that they traveled on their ID card. Means every student, every citizen, you just travel on your ID. Whether you go by plane or you go by road, you travel on ID. And that's possible for the 3 countries. Other countries of East Africa are considering that one as well, including the work permit. We also said, if you have to call each other, because you do business within the same region, why do you need roaming charges? They took a decision to remove this. And the company's actually income, in terms of calls, it doubled in 1 month. And for now, you can't reverse it. It means that if you're Rwandan and you're in Kenya, you can call as if you're in your own country and there are no costs on roaming charges. And this has helped in terms of improving business. Because you have ordinary people, they don't need passport, they don't need anything. And this is helping the trade within the region. So these are just some kind of quick examples. They also discussed in terms of the cost of travel. And this has reduced significantly with the cooperation of the airlines in the region. And the price has really come down significantly after the debate of why the cost was so high. And sometimes it was abnormally so high. But when they discussed it, then decisions were taken. So I see this one as the type of leadership that we need in order to bring these kind of barriers down and allow the free movement of goods and people. It starts with the people moving.
It's very difficult to accomplish what we've been tasked with at this stage, and that is to cover the African economic outlook sufficiently in 60 minutes. We've got 7.5 minutes left, so I'm going to use the closing session, beginning with Minister Nene, for you gentlemen to throw forward to anything that we have left out of this equation that you deem to be a burning topic, because in that regard, we can fit another 5 key issues into our debate. Minister Nene.
Thanks again, Bronwyn. I think this has been a very good opportunity for us to share ideas, for us to share experiences, and for us also to learn from each other's experiences and failures at the same time, because there are some instances where some of our policies have not worked for various reasons. But we are in a dynamic environment where we have unique challenges as African countries. So whilst we are in the process of trying to cooperate, but at the same time, in a number of instances, also because we trade amongst each other, we also compete amongst each other. So we need to find a way of finding the right balance between being able to be in a competitive environment, but at the same time cooperating for the good of the entire continent. And I think one of the things that have actually been striking is how we all are committed to getting Africa to work. And with WEF being a global phenomenon, having come to South Africa and having actually brought Africans together with the global players, having been able to begin to look at how best we can actually benefit from each other's experiences, I think this has been a wonderful opportunity.
Minister Gatete.
Yeah, quickly, one thing that has been discussed but not exhaustively is the issue of private sector financing. Traditionally in Africa now, macroeconomic stability is now a reality. There is no doubt about it. We've been traditionally working with international financial institutions like ADB and the World Bank for government borrowing and making sure we stabilize the economy. But in terms of the private sector financing, what has been crucial is there has been significant movement in terms of really creating the environment for the business people internationally to come and invest in our own countries. But we have not focused more on how to bring in the cost of borrowing down, because we have not insisted on the capital market development. And this capital market development is one of the key areas that can bring resources, whether from the region or internationally, that can help in terms of lowering the cost of borrowing by the private sector to invest together with the government. And I think this is an area that we should keep discussing as we go for next year and the years to come.
We've got 4 minutes to close. Dr. Kaberuka, your stage is yours.
You asked for one. If I had two, I began with, we need to do something about these conflicts we thought were behind us. But as you can see in Burundi, we have a risk of throwing it all away. Efforts over 10 years. We didn't have time to discuss this. I would have liked to. But since you said one, I'm going to focus on energy. This morning, the Africa Progress Panel issued a report about climate and energy and indicated that on this continent, we don't have to make a choice between clean energy and growth. We have plenty of clean resources. But now here's an issue. How do we get financing to ensure that all our countries, from South Africa to North Africa, we can fund this gap? It's about policies. It's about having the lack of ESCOM, the national off-takers, having strong balance sheets, strong regulators who are independent in law and fact. And then you're going to see money pouring into this sector, which all of us need for human development and to power our economies. That is something I feel very passionate about, even after I leave the African Development Bank.
Antony.
I'll be very brief. I think there's an opportunity for governments and private sector, international financial institutions to work much more closely together so that we can bring global companies to Africa and we can take African companies globally. There's good work going on in this space. I think there's a lot more that can be done.
Makhtar.
There's convergence of view. Everybody agree on the main issues, private sector, public sector, DFIs, everybody agrees. Implementation. Africa is a safe place, predictable, so please, pension holders, pension fund managers, and those who are holding long-term resources, please bring it to Africa, because that's what helps us really bridge and invest in infrastructure like Donald indicated.
Thank you very much, gentlemen, for a robust debate on Africa's economic outlook. And thank you so much for joining us for the CNBC Africa debate on Africa's economic outlook, coming to you live from the 25th World Economic Forum on Africa, which is drawing to a close here at the Convention Center in South Africa. Thank you.